Hello, ORAT Nation. This is Dan Bird. It's Wednesday, March 15th, and the market is very volatile today. So I wanted to do a midweek update. I wanted to do it before the close today so we could actually, I know you're going to get this after the close, but we can actually watch the close and see what happens. But before we do, right now we've got about 13 minutes. So before we do that, let me share my screen and show you a few things. Okay, so here's this week's economic calendar. And as you can see, the CPI came in right as expected, 6.0%. I know in Sunday's call with Zuber, he was projecting, I think, 6.2, and I was saying there would be a 5 handle, probably 5.9. So we ended up somewhere in between those two. Not quite the 5 handle, but close. But the good news is that it at least hit expectations. But the even better news is the PPI year over year, actually this is the month over month for the PPI, came in better than expected. So the forecast for PPI was 0.3 plus 0.3. It actually came in at negative 0.1%. So that means not only is inflation slowing down, it means that it actually is reversing. So prices are actually dropping from the wholesale level rather than just, slowing down the rate of change of how fast they're going up. They're actually dropping. So that should have been positive. But of course, all of the banking news is what's rattling the markets right now. And we keep every day, just like in 2008, every day we keep getting more news about more banks that might be closing up. Credit Suisse was the big one today, so the market went down. But let's take a look at what the market looked like. The first thing I want to show is this one here that I've showed before. This is the long-term chart. And when we get close to the close, I'm going to switch over to that and then we'll come back to some of this. But this is the long-term chart. And what I want to point out here is that there are two indicators I have on this one. The first one is the Fibonacci levels. And I had an explanation of Fibonacci's on Sunday as well as in my newsletter. In fact, let me open my newsletter for those that have not received it. If you're interested in participating, I do this every Saturday, mostly for my own purposes, but I've been sharing it with friends and families as well. So if you are interested, just send me an email to breakpointtrading@gmail.com. And I'll send you last week's newsletter and I'll add you to the list for this week. And you'll get some of the same kind of stuff. So the Fibonacci levels, the anchors for this is the all-time high back at the very end of 21 and the COVID low in 2020. So there's two components here. The orange one is the Fibonacci levels. The blue one, it divides that period up into quadrants. So what you can see, hopefully that should jump out at you, is the 50% level, both for the Fibonacci and for the quadrants, is exactly the same. It's right at almost 3,500, 3,505. And that was the low that we hit pretty much in October, 3,491. The other one is the Fibonacci levels at 38.2%, which is what we came down to at the most recent higher low when we were hoping to be putting in a new uptrend. So that was right here in December. We hit that higher low and then started back up again. Interestingly, when we went back up, we hit the 23% Fibonacci level, the orange one, as well as the 25% quadrant level, the blue one. So hit both of those and started coming back down again. The reason I'm pointing this out is this 38.2% at 38.15 is a really, really important level. So keep that in mind when you look at this. By the way, the next level down here for the Fibonacci is at 61.8, which is at 3,200. A lot of people have talked about that as where the market's headed for a new low. And that's the reason that they mentioned 3,200, because everyone's looking at this. It's not just me. And then the next one below that is around 2,800, which is the next quadrant level. 2,800, which also happens to be the 76% level too. They're both right here at 2,800. So keep that 38.2% one in mind. This is what I call my bottom finder. This is a chart that I use to try to help identify when we might have been putting in a bottom. I put in these two vertical red lines are the bottoms we made in June and the last one we made in October. And the one in October has a bullish divergence. So you can see where the momentum indicator was moving up and the RSI, relative strength, was moving up, even though the price was moving down. That is a bullish divergence. They don't always happen, but when they do, they're a pretty good indicator that a reversal is probably going to happen soon. I'm not necessarily seeing the same thing right now. There's a little bit of a divergence in the sense that the momentum indicator down here and also up here are a little bit higher, or even if they are even, that's still a little bit of a bullish divergence, because if you follow that down to the price is dropping. But it's not nearly as pronounced as it was in October. So we'll see what happens. By the way, I have this set on 15 seconds. So this will update every 15 seconds. So right now at 7 minutes till the close, you can see this particular candle right down here. Also down here for the percentage of stocks above their 50-day moving average. When it hit both of these red lines, you can see it went below 20%, I think, or might be 15%. So those were really good indicators that a bottom was about to be put in. We're not there yet. So on this particular indicator, we're not there. And the 200-day percentage of stocks below their 200-day, both of them went below 20%. That's quite a ways away from there right now. And for the put call ratio, when it goes above 0.8, which is this pink line down here, it went above 0.8 before the lows were put in. It went way above that, by the way, in the last week or so, and then started to drop off. Also look at the VIX. The VIX down here went well up to well above 30 in both cases. And we got to 30 again. It actually hit 30 again today. So you can see down here closing in 5 minutes. So those are all indicators that we're getting close to a bottom. I'll show you another one with VectorVest in a minute. But if the market is stronger than it was back in October, then these may not hit that same low level. So we'll have to watch it and see what happens. This is a really interesting chart that I put together. This is a 10-minute chart. This one on the top is for the S&P. So these are 10-minute bars here. What I did was I put in the 10-year yield and the VIX side by side, because there's been talk about the 10-year yield. When the 10-year yield goes up, then the market goes down. And when the yield goes down, then the market goes up. Except that's not what's been happening since last Thursday. Last Thursday is this blue line right here. And what I want to point out here is also when the VIX goes down, the market goes up. So you can see this big run up right here. This is March 2nd through March 7th or March 6th. You can see the 10-year started to come down. The VIX started to come down, the market went up. However, what's happened since last week, and this is why I wanted to point this out, the VIX has been spiking much higher. The VIX number is over here on the left. So you can see 2930 is this top line up here. So the VIX, and this is a 5-day moving average, so it's not going to hit exactly all the way up there. But it got way up here on the VIX, and the 10-year went way down below, went the opposite direction. So these two were pretty much moving together for the most part. When the 10-year went up and the VIX went up, then the market went down. When the 10-year went down and the VIX went down, then the market went up. But now it's the opposite. So what this is telling you is the VIX, which is the volatility index or the fear index, is spiking higher because there's a lot of fear in the market. The 10-year yield on bonds is going lower, which should be good for stocks, except the reason it's going lower this time is because of a flight to safety. So everyone's moving out of stocks, moving into bonds because they're moving to safety. So that's the reason these now are inversely correlated rather than being correlated. So usually when the 10-year goes down, that's a good thing for the market. But in this particular case, ever since this blue line last Thursday rather, these have been moving in opposite directions from each other. Just an interesting chart. Here's the VIX also. This again is on a 15-second update. So you can see the VIX hit up here. It hit over 30 a couple of days ago. It hit over 29 today. And you can see the put call ratio down here as well. So right now, the number of stocks over their 50-day moving average is at 18, almost 19%. This is for the S&P 500. So 500 times 19% means only 95 stocks out of 500 are above their 50-day moving average. I have seen this as low as 2%. Way back here in October, this went down to 2%. That meant there were only 10 or less than 10 stocks above their 50-day. So we're not there yet, but if the market's strong, then we might not even get there. I'll talk about this in a minute. Let's take a look at what the market is doing right now. So it's 3:58. So we are about 2 minutes away. At one point, you can see in the upper left, the Dow is down 300 points. S&P is down 32. Market has 1 minute till the close. So the S&P is at 38.85. This is set up with a weekly on the left-hand side, and you can see the Fibonacci levels once again. So you can see we're right at that 38.15 is the 38.2% Fibonacci. I put the Fibonacci level in here in purple. We went down to it 2 days ago, had a little reprieve yesterday, and then dropped again today, but did not go back down to it today, even though we had almost a 700-point drop today, early this morning. And then the one on the right-hand side is a 30-minute chart. So it shows you much faster chart. You can actually see the close here coming up. You can see the market is actually moving up into the close. And you can see this right here is 1 o'clock. So from 1 o'clock until now, the market has been steadily moving higher. Hopefully you just heard that bell. And right now the Dow closed down 278. The S&P closed down 20, almost 27, less than 1% on both of those. But look at the NASDAQ. The NASDAQ has closed up, slightly up. So even with the big sell-off today, the NASDAQ actually was the stronger one. Which brings me to the next point that I want to make, because this is very interesting. If we look at the technology sector, and let's look at the ones that are at the top of the technology sector, both of them positive today and a big down day. Software was positive, computer hardware was positive, and semiconductors were just barely below positive. So why would that be? With the market selling off like this, if traders are moving to safety, why would they be moving into growth sectors, back into technology? Here's NVIDIA. Let me put this on a 15-second. You'll see how they close. Look at NVIDIA closed at its high today. Let's look at AMD. AMD closed above. It's actually broken out. AMD is broken out of the previous resistance level. So all of these, let's look at Salesforce, just out of curiosity. Salesforce is heading higher. Microsoft is heading higher. So that's a software stock. Splunk, let's look at that. Splunk is actually heading lower. But a lot of the software stocks and semiconductor stocks, if we look at software, we can see the ones that are at the top. I don't recognize all of these. Smartsheet is near the top. SentinelOne. These are all software stocks. And then if we go back and look at semiconductors, Pixelworks at the top of the list. AMD near the top of the list. So NVIDIA is positive today. Intel, even Intel is positive today. So a day when everything was selling off big time, technology was doing really well. The NASDAQ did really well. Back to the S&P, and we can see how it ended. And the important thing, again, to watch is that 38.2%, that Fibonacci level, which is this purple line here, and you can actually see it over here at 38.15. We came down and hit it today. This is a weekly chart again, so we've got 2 more days left to finish that one. But we came down and hit it 2 days ago, bounced up and did not come down to it again. And at the end of the day, we closed higher towards the last few hours of the market. That's all very positive for the market, even if we continue to get more bad news from the banks. Now, banks are not necessarily a great place to be, but there are some signs in the market itself that this downtrend is not going to hold, that it may actually start an uptrend here soon. One thing to keep in mind always, make this a little bigger. This is the Max Payne report from Tom Bowley. I talked about this last month in the newsletter. I don't always put a lot of stock in it, but it does help you understand the direction. So what happens when options expire, which happens this Friday, the market makers that have to pay out on those options would actually prefer that the market moves in the opposite direction of where most of the options are being bought. Right now, most puts are being bought. So most traders are betting the market is going down. So they're buying puts. And what Max Payne does is it figures out what the equilibrium for these stocks are. Where is the Max Payne? Where's the point where all of those puts will expire worthless? And if you look up here at the top, the SPY and the Qs, SPY is for the S&P. For this one to have Max Payne, it would be a 4% gain or ending at $400 for the SPY. And for the Qs, Max Payne would be ending at 292. So let's see where they are out of curiosity. So the SPY right now is at 389. Remember, 400 by this Friday would be Max Payne. And the Qs are at 299 after hours, 298 for the Qs. So the Qs are already over the Max Payne point. If the market continues higher for the rest of the week until Friday, all of these options, you can see here, the net put call options over here, there's a negative 176 million, 82 million of the Qs. If these continue to go higher and end up here or higher, they will expire worthless, and the market makers won't have to pay out those premiums. Those premiums will just expire. So that is another sign that for the rest of the week, the market may very well continue higher. Economic calendar was looking pretty good. The last thing that I want to show before I sign off here today is VectorVest. And here's how VectorVest ended the day. Now, what VectorVest typically says is the buy-sell ratio, and you can see it down here, the number of sells, almost 40% of all the stocks in its database of, I think they have 4,000. No, they have 9,000. I'm sorry. It's tracking 9,100 stocks. So this is way bigger than the NASDAQ or the S&P or any of those. It's a much broader representation of the whole market. Of 9,000, over 9,000 stocks, 40% of those were sells today. 4% were buys. Now, what they typically have seen is when the buy-sell ratio gets below 0.2. Right now it's at 0.11. That is an extreme level. That's the point where the market is looking for a bottom. And when the MTI, that actually combines all three of these indicators, the market timing indicator, When that gets below 0.6, that also indicates that it's at an extreme level and a point where the market is looking for a bottom. So all of these things are starting to come together that may imply, if you look at a market timing graph, that may imply that the market, the sell-off might be temporary. I think the good PPI number was good today. I think because of what's happening with the banks, a lot of people are starting to put pressure on the Fed to hold off on more hikes. I mean, I know we thought a quarter point was certainly coming next week, but if some more banks fail this week by the end of the week, and even if they don't, even with just the news today, the Fed may actually come out and say that they're going to pause. In fact, they might even do it before their meeting next week. And if that happens, the market is just going to take off. Now, for VectorVest to give us a buy signal, it would take quite a bit for it to move to a buy signal. You can see that their signals are pretty accurate. The sell signal came here on February 21st. And since then, the market has just done nothing but go down. So its signals are pretty good. It would take quite a bit for it to get back to a buy signal. But some of the other indicators that I'm watching are starting to imply that there actually could be some hope. So we'll see. Doesn't mean it will happen. Keep an eye on this 38% level, which is at 38.15. If the market closes below that, remember, everybody's looking at this. If the market closes below that, and if in fact, if it does it for a couple of days straight, then it's probably going to sell off very rapidly down to that next low, the October low, and we'll see if that holds. But that's the one to look at right now, to watch that particular level. So that's where we are today. We'll see. We'll talk with Zuber again and talk about our forecasts and where the market is and where we end the week. But that's what I'm seeing right now. This one here, again, this is what I call my bottom finder. I think we're getting close to a bottom. If I zoom this in a little bit more, let's go into 6 months and take a look at it. You can see it a little bit more clearly. So there's a 38.2% Fibonacci level right there. It's right about the point where the December low came in, which ended up being a higher low, which is what we want to see for an uptrend. We also put in a higher high. So we don't want to break this low. So we don't want to go below this 38.2%, which is about 3,800. You can see today, the candle today is an open candle. That means that it closed higher than it opened. So we ended the day pretty well, and we'll see if that continues tomorrow. So that's where we're at. You can see the VIX a little more clearly down here as well. The VIX is also at an elevated level. It's not quite at the level where the market reverses. There's still room to go. In fact, if it gets over 30, you have to be very, very careful because anything can happen if it's over 30. But right now, we'll see how the rest of the week pans out. It looks to me like we might have a little bit of a rally into the end of the week. I think folks are starting to think that the Fed might pause. We'll see if they come out with an announcement or not, but that's where we're at for today. So hope everyone is safe and keeping your money safe as well. Put your stops in. I am still in cash, waiting for a bottom. So that's where we're at. So good luck, everyone, and I will talk to you again on Sunday. Take care.